Hey everyone, thanks so much for joining. It's Renzo Renzi and Laura Lahaini and Natalie Bavegni here. Laura and I are real estate agents here in the Miami and the South Florida area, and Renzo is one of our top favorite mortgage lenders. So we have some great questions to ask today because we just had a client last week. We just closed this client, but he was very, very hesitant to talk to the mortgage lender in the first place. And I reassured him this is so easy. So Renzo, I'd like you to go over, after I introduce Laura, I'd like you to go over why it's so easy and simple. So Laura, please introduce yourself.
Hi, my name is Laura Legiani. I'm a real estate agent with eXp Realty. Natalie and I work together. Renzi is one of our support members, to call it somehow. He's one of our team. We have Renzi, we have mortgage lender, accounting, like a lot of people. So please, let's move on and let's start this.
All right, awesome. So I guess I'll introduce myself a little bit. I've been working with them for a while now. I've been doing lending for 5 years. And the main thing that I've seen amongst buyers is timidness to begin the whole home searching process because it's kind of scary and it's impactful and it's a very big life choice. So when people have to face big life choices, sometimes they're wary, they're fearful. It's like walking on eggshells. And some of the conversations and topics that we're going to be covering today is going to allow a buyer, a realtor, anyone that's has the idea of purchasing a home or helping someone buy a home. We're going to talk about the pain points that people have and how to get around them and to move forward because everyone can say at one point in their life they want to own a home. And here are some of the hurdles that we're going to get through so that you can understand the home buying process better.
Yeah.
Okay.
So one of those first hurdles is why do you think buyers are hesitant to just even talk to you, Renzo? Why?
I would say it's a very sensitive subject. You know, you have to open up your finances, and sometimes people kind of feel a little weird showing someone all of their bank statements and all of their income and their credit and how they spend money. I mean, even me as a lender, if someone said, "Hey, show me everything," I'd be like, "Whoa, hey, calm down, all right? That's a lot." But then you have to realize that the individual that you're dealing with is kind of like a doctor, right? And when you're dealing with a doctor, you can't just be hiding symptoms and things from that doctor because then you'll get an improper prescription. You may never get help. And the help that we're doing is putting people in homes, allowing them to start families, newly married couples, things of that nature that want to buy a home. If we don't see the pain point, you may never get diagnosed correctly, and that could postpone you owning a house, missing out on a great deal. We could all attest that there's thousands of buyers that didn't buy in 2022 when they could have, and now they're kicking themselves because they didn't want to get the proper medicine because they were scared to go to the doctor. And you have to look at loan officers like doctors, and you have to realize that they're licensed professionals and they're going to help you get where you want to go. So it's kind of just accepting that fact and getting that weariness off and go and buy a house, or at least go attempt and go get instructed on how to do it. Because I think I would say like if you were in a room full of 100 people of any age, and you said, "Would you like to own a home one day if you don't own one?" Everyone would raise their hand. And that's
Definitely.
all I need to know.
I
So I agree 100%. So what will be the misunderstanding about credit and financing? What do they
So,
gonna have?
some people believe that it's a lot more expensive, and they don't educate themselves a little too much on what a monthly payment's going to be. So when they look at their credit report, some people don't check their credit report at all. Like even me as a loan officer, like I will randomly just one day be like, wonder where my credit's at. Let me just pull it on my software system and just go take a look. But that's, every 6, 8 months, maybe a year that I just have the epiphany to do so. And it really allows you to know where you're at. A lot of the software systems that we use within our banking apps and just anything, Credit Karma and all this stuff, it gives you an idea, but I've been doing this long enough to know that things change by 50 points or more in some cases, up or down. Sometimes like, oh, I have a 650, and then you pull it and they have like a 689, and you're just like, okay, that makes a big difference in a good way. So and the funny thing is just as often as it happens in the bad way, it happens in the good way.
Mhm.
So some people will say, "Oh, I have a 700," and they really have a 650, and some people will say they have a 700 and have a 750. So the main thing that you can do is get educated, go to a loan officer, go to any lender, or just get your credit pulled somewhere. And do a soft pull. You don't have to do a hard inquiry. There's two types, and this is something that buyers need to know about. There's two types of credit pulls, soft inquiry and a hard inquiry. Hard inquiry is going to actually put a notice on your credit, and it's going to bring down your credit points by like 2, 3 points. In a couple months, it'll wash away. But a soft pull is cheap, maybe costs like $36, and you're going to get a very accurate representation of what your credit is and what your monthly obligations are. And it'll let you know if you've ever had any collections. Even me, parking tickets, things like that, you forget. I even went and got my blood taken out at Quest to go do like just like a regular checkup, and I had thought I paid when I left, but it turns out I didn't. And I didn't get anything in the mail, obviously, because sometimes you move and mail goes somewhere else. And then I had like a $350, something accruing in collections for the medical examination I got for a blood test. And things like this happen. I'm young. There's people that are older and more mature in their credit, and things like this pile up. And if you don't take a look and you go try to buy a house, those are the type of things that bite you. So it's
Yeah.
good to go take a look at your credit for 36, $40. It doesn't hurt. And I strongly support everyone do that just for the sake of knowing and don't rely on your apps.
With that being said, just for the sake of knowing, what comes along with credit also is your debt to income ratio and how that affects your monthly payments. So, most people are scared to come and talk to you because they think they have it out of whack or they have too much. Could you tell us about that?
Yeah, so what I notice is individuals when you speak to them, everybody has a very good understanding of what they can afford a month. So there's individuals that have multiple different businesses. Some they're W-2, then they have a side business that's 1099. And depending on, how they qualify, I wouldn't get the client too caught up on how their paperwork is. It's more on the sense of, hey, do you believe that you can afford this monthly payment?
Right.
Yes. Okay, let's go find you a home that fits this monthly payment. Okay. And then whatever loan program that we need to tailor for that individual, we will do so. There are so many loan programs that allow people to qualify that, yes, there's variations in rate, but at the end of the day, the goal is to purchase a home with a comfortable monthly payment and a comfortable down payment. So all you need to get is, hey, I've been renting for 3,500 a month. I'd be comfortable with a mortgage between 35 and $4,000 a month. Okay, perfect. Now let's go find a home that matches that with a down payment that you have the capacity to do right now. And then the loan program, we will fit that to you. We don't start with a loan program. We
So
start with
Renzo, what
you,
you're
and
telling
then we
us
fit
is
it.
that you're going from back to front.
Yes, in a way, because the most important part is the individual's confidence on their ability to make that monthly payment comfortably without sweating. Once you give me that number, 9 out of 10 times, if there's a will, there's a way, and we can make it work.
Mhm.
Fantastic. That's great.
So let's go to the next slide
Okay.
because we covered finances.
So we already missed it. Okay, so
Already
this is
covered the
the
credit.
credit. Okay, awesome.
So why
Um,
don't you talk a little bit to us? Here it says buyers assume they always have to put a 20% down. However, there are so many different programs. Can you talk to us about a little bit of those programs?
yeah, so
How they-
first time home buyers and doctors and things like that, the down payment variation is between 0 and 20%. Really, the only time that individuals have to do 20% plus down payment is on investment properties and condominiums. And the reasons why condominiums cause, not all, but can cause buyers to have to put a larger down payment is because they have to do a limited review. And a limited review is basically a questionnaire that the condominium has to fill out. And based on how they respond to this questionnaire, determines if they pass a full review or a limited review. And to put it in layman's terms, imagine a limited review asks you 5 simple questions, and a full review asks you 100 questions.
Oh, wow.
About the building condition.
Yeah, just not only is the buyer qualifying for the home, the building is also qualifying for the loan.
Mhm.
So, but for single family homes and townhouses, 0, 3, 5, 10, 15, they're all possibilities. Now we just need to make sure that no matter what the down payment ends up being, can you afford the monthly payment?
And that,
Everything revolves around affording a monthly payment. Then down payments come into play.
Okay, so now that we have covered that and we see that there are different ways and different opportunities for the buyers, why are they so afraid of commitment? If they have to pay anyway a rent, what is the difference between paying a rent and paying the monthly amount of a loan?
Some people, they try to time markets. You know, they get caught up in trying to time markets. They get caught up in trying to time interest rates. Also, coming up with a big chunk of change and depleting savings scares people. And they have this belief that, they need more time to save. But if your future mortgage monthly payment is going to be the same as your rental payment, your
Mhm.
ability to save should stay the same. Now it's just finding a place like a place to be comfortable. How much money can you put into purchasing a home and then have money left over to maybe furnish it, and then after that have enough for, to fix a car or replace a car or things of that nature. And it all depends on the individual and their comfort level. And then that kind of determines the risk that they take because buying a home is a little bit different. If you buy a home and you have a loan, you're obligated to this loan, and it can benefit your credit for the rest of your life, or it could damage your credit. And everybody has the reason why we get such a big rush when we buy a home, and it is such a great accomplishment. On the flip side of that, it's also scary because of how big of an accomplishment. It can go the other way for some people. And you have to make sure that they can afford the monthly payment. That's really what it comes down to. And then the idea of affording a monthly payment is not just making the money monthly, but having the savings and just knowing like, hey, if I got sick or if I lost my job, I'd be okay. For a rental, you leave, you can get evicted, you can go back home. With a house, you don't just get to go back home and get a little pow pow. No, you go through foreclosure, and that worries people. So it's a very big obligation that people carry, and that is sometimes why people are fearful of it. But it is the ultimate goal, especially in the United States of America, to own a home and have that white picket fence life.
and I think it's also a misconception that, I mean, for me anyway, my clients, if you can't pay for your mortgage, you can always move right back in with your parents and rent your house out. With the rental markets,
Very
you're
true.
going to get a lot of money for that. So you just have to be that advisor, the coach. And Laura, me and you were the coaches for our buyers. But another thing I always get is, oh no, I don't want to waste the lender's time because I don't think I'm ready. Which comes, which, which I mean is talking about coaching. We are coaches. We're going to coach you along how to get to your goal. So have you ever had that problem?
Yeah, so the beauty with yeah, I guess the more experience that you get in lending, you can talk to people and within a 10-minute phone call, you can figure out where someone's at and tell them where they need to be. So if you have 10 minutes out of your day to just talk about what you're doing for work, how long you've been doing it, if you want to change jobs, how much you have saved. Like for me, I can pre-qualify someone in about 10 minutes verbally. And then, with what we talked about, we have to match it up on paper. But to have a really good idea of what you can afford monthly, what type of down payment you're capable of putting, and then how that factors into a purchase price of a home, 10 minutes. So if you have 10 minutes in your day to go talk about your possibility of owning a home in the future, make the phone call. That's what lenders are for. And obviously, people are hesitant because sometimes there's lenders that are like, give me all your documents and pull the credit and then I'll talk to you. Um, I'm on like you said, I work things backwards. I want to understand everything before I ask for any documents because maybe you're not ready for a home, but I can tell you, hey, come back to me in 6 months after you've done X, Y, and Z. Saves me time and saves you time.
Right, because what if you don't even have a down payment. How
Correct.
do you possibly think they're going to buy a home?
Yeah, and I think it's great what Renz is doing, like going backwards and only with 10 minutes of a verbal pre-qualification or also lowers the stress level of the buyer, which I think is fantastic. And that way they have the opportunity to meet him and have some trust because Renzi knows what he's talking about. So it's like you say, the doctor, like you have to know what you're talking about
Correct.
and a way to, and in those 10 minutes conversation, they can see what you know
Yeah, you can be given a path.
and what is your interest. Mhm.
Correct. You're given a path in
Mhm.
10 minutes.
Yes.
And that's what everybody needs. And then if the conversation goes great, and maybe the individual didn't even really know what they can afford, and then you tell them, hey, look, you can comfortably afford a purchase price of this, and that house looks like this, and you send them a Zillow link, and they're like, what? Let's do it right now.
Of
And I've had those instances before. So it's really just opening the eyes of the consumer and allowing them to know where they need to be or where they are right now.
Yeah, so if you go to the next slide, you'll see another misconception. The next one, that one we already talked about. They're feeling like they're wasting your time. But this one, the mortgage, and do they have enough money for closing costs? And rent is cheaper. But have they really sat down? And this is what you do, Renzo. You sit down with them and you show them, hey, they've been renting for 3 years, how much they've wasted and
Yep.
how much they could have saved, not only in how much that property went up in value because it was only gone up in the past 10 years, but also how much they've just literally handed over to the landlord.
Yeah. So, I mean, m most people they keep their rent and mortgage payments, at a certain level. Like people really don't just go from 3,500 to 6 grand. So when the monthly payments stay about the same, rent is at 100% interest because you're paying to occupy something for a certain period of time and you don't own anything. So once that year's over, it's kind of like lighting a match to the money. So if you rent, for 3 years and that's it's at 3 grand, you have $36,000, a month. That $36,000 when you move out is gone. But when you buy a home, when you make that same $3,000 a month payment, you're paying down principal, you're owning the home. And in an environment where the government has printed a lot of money and inflation goes up, people that own things win when inflation goes up. People that don't own things lose dramatically. So in an environment where we know the government, or just the economy is experiencing high levels of inflation, it'd be in your best interest to own something tangible. If you own a car, you saw cars. People were selling their cars back to dealerships from when they bought it for. Boats. So when you see an inflationary period, it's in your best interest to buy things because the price of those things go up. You have more dollars in the economy chasing this finite good. And a home in Miami or in South Florida is finite. There's not that many of them and there's not so much for sale. And if there's something that's good, there will be 15 buyers behind it. If something is priced properly and is worth its time, you will see 10 families show up. If it is overpriced and not worth it, no one shows up. And that's just the way it goes.
So, Renzi, what we have talked about all this, also, what are the questions a buyer should should have as an answer from you? I don't know how to express that. It's like, what should they ask you to feel more comfortable to be able to buy a home or to know what is the process or
So
what
this
are
is
the typical questions
Yeah,
they
I would say the main question that I want a client to ask me is I want to get a random Zillow link and be like, how much is this house with 5% down? I want people asking those questions because in 2 seconds I can pull out a mortgage calculator and just be like, boom, this is what it is. And they're like,
How much you need to make in order to afford a $300,000 home, a $400,000 home.
that's on a per person basis. It's very specific. So it's hard to say that because if you have someone that doesn't make much, but has no debts, they can qualify for more than someone that makes a lot and spends a lot. So it's all on a per person basis. I'm like I said, I'm very monthly payment oriented. So the first question that I want a buyer to ask me is, how much is this house a month? And then I'll say, how much do you have to put down? And every single buyer has the ability to know what 5%, 3%, 10%, 20% of a purchase price is. Everyone can do that. So they have an idea, you know, and from that point forward, I give them a monthly payment. And then we kind of ping pong a little bit. I'm like, oh, what if I put a little bit more? I'm not comfortable with that monthly payment. And those are the questions. Once we have an aha moment between down payment ability and monthly payment, then we'll figure out how to get you to qualify. We'll figure it out. There's 20 loan programs for people. You know, something will work. And if it
So
doesn't work, then we change the property
what do you,
or we change our timeline.
right. So what do you say to those buyers out there who are waiting for the perfect time?
The individuals that are waiting for the perfect time always miss. Like rates, I haven't seen like they go up, they go down. I never some people get lucky, some people, they're shopping for a house for a year and they get under contract right as like rates drop, and that happens. But you'll never be able to do that yourself. If you find the house that you like and you have to go pull the trigger on it and you want to buy it because it has the right area, the schools, the rooms, this, that, you go buy it. I mean, when you see interest rates differing between half a point and a quarter point, it never really makes a difference to someone that can afford a home. Like if you can afford the home and and if you can afford a home and you find a home that really works for you and you've been shopping for 6 months to a year and you get all caught up in a quarter point difference on a rate or or just anything about around a half a point, you're missing up on so much that you get so much more usage out of the home, so much changes in your life, and that quarter point or half a point, I mean, $250, $500 a month difference, that's a night out. It's a night out eating nowadays, so that's not a reason why to pass up on a home that really fits you.
Yeah, 100% agreed. And unfortunately, media and everything it's all about interest rate when that's not the whole thing. Uh, so some buyers say, well, I don't know if I want to do this because I had bad experiences or they had a friend or a family that have negative talk about a loan. What would you say to those people? Or they think they have, uh, I don't know, other fees that they didn't count on, or
So, I mean, the an issue like that, right? So the pre expectation of lending and financing is that they're always out to get you. And in very much case, it is that way. Like when I go buy a car, I do financing for houses. When I got to go up against the guy financing my car, I'm there. I'm ready. I'm like, what's going on here? What is all of this? And rightfully so because it happens everywhere. You have to be vigilant. You have to really look at and get another pair of eyes. And that typically comes from an experienced agent. And it sucks for me to say, but like looking around and seeing your different mortgage options, like, I don't like getting shopped, but if I was getting a loan, I would go contact multiple people and get educated and see the differences and ask questions and be like, why? And kind of get educated, because you're taking out 300, 400, $1 million or more in debt. You better really understand what you're signing on. And it's great when you can trust your loan officer, but sometimes you can't. And you need to be vigilant and you need a team. And there's nothing like parents and people saying, oh, having like a negative connotation toward it, but they're just trying to protect you because maybe they've been burned before. And you have to take that with a grain of salt. You have to be like, hey, it's there for a reason. And but that shouldn't stop you from getting a home. Because if you look at Natalie's beautiful little background, all of those buildings, everything that we have around, everything that we touch has all been financed. without financing, the world doesn't go around. So if you're gonna run away from financing your whole life, then you're never gonna live a very large, fruitful life because there's no leverage. You can't live above your means. You can't build buildings. Like you can't make things that are nice. You need help. You need financing. And majority of homes that are purchased are all financed for a reason.
And
Well,
we can talk about the cost of waiting, what it costs, because our friends, our families do scare our buyers into not buying. But what's the cost of waiting? If you don't have a home, you better get a home because it's only going to get it's more.
I'll tell you a beautiful story, or actually it's not beautiful, it's kind of sad, but for the 35-year-old demographic of individuals, you know, my brother is a perfect example. The house that I got back in 2015 with my mom, right? Like she helped me buy it. I used to cut this guy's grass, okay? And I got my uncle and my mom to co-sign on the loan, told them to rent it out and wait for me to graduate from college. We bought this house for $315,000. It's a 3-2, about like 2,200 square feet in South Miami. Okay.
Wow.
wow.
And this is, I was young, but my neighbor came up to me, said, "Hey, we're neighbors. I want to sell it to you." And I got my uncle and my mom together to buy the place, rent it, and now I live there. Okay. My brother, he's older by about like 10 years. Okay. He could have bought that house then, but chose not to. Okay. And now he's shopping for a house and it is much more expensive.
Why did he choose not to?
He wasn't thinking, he was just living in the moment, going to work day to day. Life passes you quick. And if you don't like kind of, you know, say I'm buying a house by this date through hell or high water, the years catch up. And now the same house that I'm in is a $1.2 million house. And
Wow.
if you were going to buy that house with 10% down, your monthly payment's 8, 9 grand. The monthly payment on the house that I live in now is two. So the cost of waiting is taking a $2,000 payment in 2015 and turning into $9,000 and
Wow.
taking a 300,
Ouch.
and I haven't done anything to it. It's the same terrazzo floors, same kitchen, same 1980s bathrooms. Like,
Not to mention, Renzo, you can pull the equity out of that home and do something else with it as well.
yeah,
So
you
you're
can.
sitting on a chunk of money. So again, what is the cost of waiting?
Exactly. It's opportunity cost,
It's
you
opportunity.
know, and it's every person is different. Some people are more conservative, some people like more risk. But at the end of the day, you have to do something if you're just renting.
Right.
Because if you're leasing your car and you're renting your house, stuff is
Doing
passing.
nothing.
Like the cost of waiting is only going to increase.
Yeah.
The cost of cars when you go buy your car is going to be more. The cost of buying a house, the more you wait. So it's kind of like a stop the bleeding and figure out how to attack it. And that starts with just talking to a loan officer, checking your credit. If it's bad, start making improvements and giving yourself a deadline. Like, I'm buying a house. I don't care what it is. I don't care if it's a tiny condo or a single family home or a townhouse. I'm pulling the trigger on something so that I can stop worrying about losing the inflation game.
Yeah. Well, thank you.
There is a inflation game. There is that you cannot do anything to that home that is not yours.
Yep.
There is that they can kick you out anytime.
Mhm.
They say that they're gonna fix something. They might
They
or they
don't.
might not.
Yeah.
So
Yeah,
Like,
and owning a home changes people's personalities. Like you look at a rental community, they don't care that the garbage is, they don't care that the paint's falling off, they don't care that the streets aren't cleaned up. But when you look at a community of homeowners, they care about how their front door looks. They care that the garbage isn't overflowing. Like people are more tidy and they care more and they're more likely to look after their neighbor's front door. If a raccoon got into your neighbor's trash and you're a renter in a renter community, you look at that and be like, that's not my problem. But if you own a home next to somebody and you see that happen, you'd be like, hey, that makes my house look bad. So there's a higher likelihood that you care for your neighbors. And when you live in a community with a higher level of homeowners, they did a study on it. Education goes up, depression goes down. Like there's so many more beautiful things that are attributes that come from a community that has a higher density of homeowners rather than renters. Crime's lower. There's a lot of things that change. And that's also another a beauty of trying to buy a home because it puts you in a different sect of the world. You know, you start walking up a little straighter, and you know the air's a little fresher, and that's something that where you're proud of yourself. You know, you carry yourself different. You say, I made an accomplishment. I bought a home. You know, I worked really hard for this, and for most people, that's the biggest investment of their lives. So,
Yeah.
what a great investment.
Well, thank you so much, Renzo, for going over the fear of rejection, the misunderstandings of credit and finances, the fear of commitment, and the assumptions about the affordability, and also the consequences of the time to wait. And if are you waiting? So I'm really happy that you went over all of these things. I think it's really going to help open the eyes of the buyers. And so everyone out there listening, you can contact me, you can contact Laura, you can contact Renzo. All of our information will be attached to this webinar. He is the best. I've worked with him for many years, and we just closed a deal. It's a needle in a haystack, but it was a first-time home buyer, and he's ecstatic. His rent was $2,000. He is paying on his own property right now $1,800.
Yeah, 3% down condo purchase. It's possible.
Condo purchase. I told you it was a needle in the haystack.
Yep.
Great. So please don't forget to subscribe and to contact us if you need any information about Miami, loans, real estate, buy and selling. We're here to help.
Thanks, everyone.
Well, thank you.
Enjoy.
Bye.
Okay, bye-bye.